a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about technology ETFs, broad technology ETFs that have a lot of exposure to technology giants that have been doing so well this year, last year, over the past decade. And as I have mentioned earlier, too, technology is the best performing sector this year again, and the best performing sector of the past decade. And despite the current health crisis and economic uncertainty, investors continue to pour money into big tech stocks because they believe in the growth potential. And all big tech stocks, Amazon, Apple, Microsoft, Facebook, they're all trading either near or at their all-time highs. And many investors also believe that these companies, because of the strength of their balance sheet and stable cash flows, they will be able to survive this current crisis and emerge stronger. Because if the economy slips into a deeper recession, then better quality companies will do well. And while digitization has been accelerating over the past few years, the current crisis has further accelerated that trend. And some of those trends, like cloud computing and e-commerce, they are going to, electronic payments, they are going to continue even after this crisis is over. And another reason why these companies do so well is because they have been spending a lot on research and development. And in fact, from the Wall Street Journal, Apple, Amazon, Alphabet, and Microsoft, they spent about $29 billion on research and development last quarter, up 17% year over year, and it is actually more than the entire annual budget of NASA. So we'll take a look at three very popular ETFs that provide exposure to these stocks. So the first ETF that we are highlighting today is the Vanguard Information Technology ETF, ticker symbol VGT. It is, in fact, the most popular technology sector ETF now, even more popular than XLK, the Spider, as in the Spider technology ETF, because it is cheaper than XLK. It charges us 10 basis points, very popular with 10 billion in assets. Now, this follows an MSCI index, which basically based on the GICS sector methodology. So S&P and MSCI, they follow GICS methodology, and GICS had a sector realignment in 2018, and I'm mentioning that because you will not see Facebook, Google, and Netflix in this ETF, because after the realignment, they went to the communication services sector of GICS. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com. It's a rank 1 ETF. And you can go to the external homepage. You can read our research report. When you go to the Vanguard webpage for this ETF, you can look at other details and the holdings of this ETF. And not surprising, Apple, Microsoft, Visa, their payment processors too in the technology sector, according to GICS. So you will see Visa, MasterCard, Intel, NVIDIA in this ETF, all very hot stocks. The second ETF that I am highlighting is iShares. It's by iShares, ticker symbol IYW. Now, this follows a Dow Jones index, Dow Jones Technology Index. And because of that, it also holds the companies that I mentioned earlier, Facebook and Netflix, Google, that are not in the Vanguard Information Technology ETF. It is slightly more expensive with 42 basis points in annual expenses. And this is also very popular, but not as popular as VGT. It has about 5 billion, little more than 5 billion in assets. Again, to take a look at this ETF, this is also a rank one. You can go to the code page. From there, you can go to the iShares web page for this ETF and you can look details and the portfolio. Microsoft, Apple, Facebook, Intel, Nvidia, Adobe, Google, these are the top holdings in this ETF. Now, the third one that I'm highlighting is not exactly a technology ETF, though most investors think that it is a technology ETF because it holds all big tech stocks. So as you have seen that the other two ETFs that we discussed earlier do not hold Amazon because Amazon is a part of consumer discretionary sector. Now, if you want Amazon and all big tech in one ETF, then this is the best option for you. It is a large, as I mentioned, a large cap growth ETF and holds all non-financial stocks which are listed on the Nasdaq exchange. It is very, very popular with over 110 billion in assets. In fact, there are just 5 ETFs that have assets over 100 billion, and this is one of them. 20 basis points in expense ratio. And again, to learn more about this ETF, you can go to the quote page on Zacks.com. It's also rank one. From there, the external homepage, the Invesco web page for this ETF, and you will see all hot stocks: Apple, Microsoft, Amazon, Facebook, Google in this ETF. In fact, those stocks account for almost 45% of the weight in this ETF. Now, I also have performance on this slide, the performance of over the past 1 year, and you can see that all these three ETFs have returned between 31% and 35% over the past year, whereas the S&P 500 index is up just about 6-7%. And in full disclosure, I own VGT in the ETF investor portfolio and QQQ in my personal trading portfolio. Thanks for watching, and I'll see you next week.